CPI report on deck for tomorrow morning. It's been a market mover lately. Steve Liesman is here with more on that.
Lots of hopes around this report tomorrow, Kelly. Improved inflation expectations in a report we got yesterday from the New York Fed, together with hopes of a contained CPI tomorrow, could create conditions for the Fed to think about resuming those rate cuts later this year. And that depends, of course, on the impact of tariffs and other policies from the administration on prices and on jobs. The least likely cutting scenario, if inflation marches higher and unemployment doesn't decline. The most likely, higher unemployment and stable to lower inflation. And then there's this worst dilemma that we have, higher inflation and higher unemployment, the stagflation dilemma. Some think the Fed would cut even amid that higher inflation and focus just on jobs. But for a time, the Fed will likely wait to be sure tariffs are not spreading to broader inflation. Stable or lower inflation, that can enable the Fed to remove 50 basis points or so of estimated restrictiveness in the rate, and it could cut as much as 100 if inflation heads lower or it's amid stable or rising unemployment. The market, it's built in the middle scenario of 50 basis points in cuts with a tentative, roughly 62% probability of one coming in September, another in December. I would point out that neither one of those shows a whole lot of conviction, just on the other side of 50%. NFIB small business report this morning showed a modest rise in optimism, but the percent of firms charging higher prices and planning to raise prices both remain elevated. If tariffs don't show up in the data, it'll be an important step to clearing the way for cuts, but it'll need to continue, I think, for at least a couple more months, Kelly, in order for the Fed to feel confident to cut.
It's interesting what you said about not much conviction on the rate cuts.
Right.
So, as I hear some people, especially those kind of closer, more sympathetic to even the Trump administration, saying, maybe this is not the time to be hammering the Fed because the economy looks okay. You cut rates here, maybe you trigger a run-up in inflation. I don't know if I'm fully persuaded by that argument, but I just find it noteworthy to see it making the rounds.
It's an interesting, I would say, contradiction, in some of the administration rhetoric when it comes to the Fed. You can't be saying 3% growth and the Fed needs to cut. Certainly not, at a 2.5% inflation rate, I don't think. You'd want to bring it down quite a bit. But if you're going to have accelerating, look, there is a potential other side to this story that could be unleashed. Let's assume you get tariffs down to a place where business isn't freaked out by the uncertainty. And then you have some of the other stuff coming from the administration bill, like the expensing from R&D, bringing forward interest expense, that kind of stuff. That could be very helpful to economic growth, in which case the Fed might want to say, you know what, if you're going to go full steam ahead, I'm not going to let up. I'm not going to let up on the brakes.
Right. And so the expectation for tomorrow is what on the core, like 2/10, I think we said?
Yeah, exactly. But
like
3/10, so you might get a pop higher in the core to 2.9. Remember, from your old days, you take off a half a point from CPI to get the PCE. So
is it a half point? Okay.
It's about a half a point. So we're real close to the PCE. Not bad. It's been going the right way. The trouble with the whole discussion is just you wait, because the tariff stuff is coming.
Right.
We're going to have to dissect that report tomorrow, look for any whiffs of tariffs or actual tariff stuff, and whether there's offsetting stuff. If people are paying more for this, it may mean they're going to be paying less for that. So we're going to try to focus on the aggregate demand. All kinds of stuff happening.
Yeah.
Question is, if you're a Fed person, are you feeling lucky? Do you want to roll the dice and say, I'm cutting rates here because I think this inflation is not either going to happen or it's going to pass through, or I need to hold on to the dice?
I think they're just going to be as safe as possible, and that probably means doing nothing until we have a lot more.
You hear a lot of that from Fed officials.
Exactly. Steve, thanks as always. Appreciate it. Steve Liesman.